All right, guys, so we move into the second month of the year, and we've got unemployment this Friday is important. Tomorrow for you guys live, ADP 7:15. Make sure you're in front of your screens for that, or at least know that that number can move us. If it misses, that comes out 7:15 Central every Wednesday before the jobs report, which is Friday. That's always the highlight of the month. That's this Friday, 7:30. The trading room guys were open at 7:15 early that day. So that's kind of what's on the calendar for this week. As you guys know, it's been a real volatile first month of the year, one of the most volatile first months of the year in a long time. Historically, I think we're down more than ever on the stock market side. But what to remember is that doesn't mean every day has got the same kind of opportunities and opportunity, but not only that, just follow through as the day before, the week before. So you got to have expectations that also change with volatility. Some days are better than others. You got to be flexible. That's what's key with trading volatility. We like it. I really believe that the uncertainty stays for a while because of the Fed, our Fed being in, tightening monetary policy, and essentially the rest of the world central bankers are loosening monetary policy. Bank of Japan, Bank of China, European Central Bank, they're all going the other way. Our GDP last week, just reported, I think, a 0.8, 0.7 for the fourth quarter. That's pretty close to what? No growth, right? And it's 3 looks at that number throughout the first quarter, but you can't say we're just flying high from an economic standpoint because we're not. Wages are flat, and now with oil getting pounced on, a lot of people would say, well, that's good for consumer discretionary spending, but it's taking all these major oil companies that have a big influence on stocks and pressing them lower, pulling the XLE down, which is the energy sector, which is a big weighted sector of the overall S&P, which is keeping pressure on the overall index. The bigger and the more the pressure is on the index, the poorer people feel. Poorer people feel, the less they spend, the less the economy grows, and it's a cycle that creates this cyclical recession expansion that we all know to be capitalism. The problem is uncertainty, and uncertainty creates volatility, what we like. Fed, when are they going to raise rates? They hope they're not going to do it in March, but you never know. We're in a presidential election cycle here in the U.S. That's also creating uncertainty. What is OPEC going to do? They're a major player on oil prices. They've normally cut production. They haven't this cycle. That's kept oil pretty ugly on the downside, which has pulled down the energy sector. And I could run you right through it. What we're going to do today is this. That was just kind of what's going on now. This is almost the third week, although I'm not going to spend this whole meeting on this, that we're talking about market structure with this new chart, not new chart, but another way to look at the same thing. And I want to create 2 exercises that you guys do out of this. Whether or not you do it is up to you. But there's a couple other things I'll talk about first. The link at the bottom of this page here, down here, is something that you guys that are watching in the future could copy and paste and watch before you watch next week's meeting. For you guys here live, I'm going to post it in the chat before we end. It's a 25-minute interview that Brad, who's a friend of mine, traded with him, same prop firm, did with the CME on a CME radio broadcast that they did earlier last year, about a year ago. It's a 25-minute radio interview, and what it'll do is get his background out of the way. So we don't have to do that next week. We could just talk shop more next week. He lives in the city and we're out in the suburbs. I might even have him come in if he wants. I don't know what his schedule is, but he'll definitely be here next week to talk about the market, not just the past, but now and things like that. So you guys watching in the future, this is the link you could paste. Don't do it now. Watch the rest of this meeting and then do it before you watch next week's meeting. For you guys, I'll throw it up in the chat so you get a head start. So we're not talking about his background too much next week. And but again, he's a guy that started at the same prop firm I started at. I think he came 2 or 3 years after me. I don't know. I think he started 03, but I'm not sure. I think he says it also in the interview. So excellent guy, excellent trader. But just take a listen to it after whenever you want between now and next week. But he'll be our guest next week, and you guys will like it. So either make sure you can make it live and ask questions, catch the recording that are always posted, track 4. The other thing before we get into this market structure and this exercise, today's meeting is not going to be real long, is I want to talk to Carl about some turn the corner moments that he has had in the last not just week or two, but couple months. So get some traction so it's not just like flash in the pan type success that he's had. And I'm going to open up his mic. Carl, are you there? And this is important. We're not going to spend a lot of time, just a few minutes, just some real quick stuff, under 5 minutes, and then we'll jump to the screen share. Carl. All right, hold on. All right, let me enable Carl's mic. Carl, can you hear me?
Yeah, I can hear you. Can you hear me?
I hear you good.
Excellent. My Tourette syndrome is finally cleared up, so I'm not as bad as I was a while ago. Itchy scalp, itchy scalp.
All right. So now you guys know when I pick on Carl. All right. Here's the thing that Carl's been telling me the last several weeks, that, you know, I'm up money, I'm done. I'm up money, I'm done. That happened a lot the last few weeks. But today, what happened?
Oh, it was a bloodbath today. And I took everything that I had done in the last 2 months, and basically threw my trading plan right out the window, and I tried to make up a loss that it just kept getting bigger and bigger and bigger, and I kept just chasing the market. And I realized that, you know, if I had been trading my regular plan, I would have just taken a few ticks and got back, and I could have gone right on the trade, but
you were looking for bigger winners because you had some losses, so you were trading the losses, not the market.
Yeah, I was trading the losses. I wasn't trading the market at all. In fact, I wasn't even looking at the market. I was looking at the 4PNF, and I just chased that 4PNF all the way to right into a hole. And I mean, it's like I almost lost everything that I've gained just in a short time. And I'm not really upset about it. I'm upset more of myself because I really have a good trading plan, and it's very simple. I just watch the 4PNF chart. I do watch the market profile. I do like that, and I also watch a 5-minute chart, and I use a lot of Gann and Elliott stuff that I'd learned previously, and I watch a tick chart. And all morning long, the tick chart kept saying negative 800, negative 500, negative 1200, and I kept trying to go long. And all my indicators were telling me that, no, you should be short, not long. And I paid the ultimate price.
You had some trades that you had profit in it that you normally would take, but you didn't because it wasn't enough profit.
Exactly.
There you go. That where you trade the money absolutely exclusively and not the market.
Yes. So, you know, I'm down $600 and I'm up 100, instead of taking the $100 profit and trading that 6 times and making it all back, I decided that no, it's going to go up to 400. I'll make this
you're
all
trying to
back
do
in
it
one
right.
trade. And next thing I know, it's down 2 more ticks, and I've kind of questioned myself on whether or not, hey, I'm kind of going, it's still going to turn around. It's still going to go, and then the next thing you know, I'm down 8 ticks, and I have not allowed myself to do that all month long. But today I did.
No, and that's, it's like hitting a 5-run home run. You're not going to do it. You're down 5 runs, the bases are loaded, and you're not going to tie it with one swing, and you try to do that. But that's not you. That's your mind. And yeah, well, that's the same thing. It's not. Your mind plays games on you. What was it that you said to me that I said I want you to repeat that, because it was pretty important. Do you remember?
Was it that joke that I
No,
told you like a month
oh, no,
ago?
it wasn't that joke.
Because that was a funny joke. I don't care what you said. I thought it was hilarious.
No, that what you said in the past, you would have just been so mad because it would have been random
Right.
to you.
Right. Yeah. Like I said, I think I wrote to you that, I should be just really totally upset about everything, but I'm not. I saw my mistake, and I'm not afraid to go right back in it tomorrow.
Well, what was the difference then in the past?
The past is I'd get down like this, and then I'd jump in the sim trade, and I would never figure it out. I just never could understand why.
You didn't know what you were doing wrong. It was random.
Yeah, it was random, and I was not picking the levels that I should have been picking, and I did the same thing today. It's exactly the way I traded in the past. I traded like that today, and just had my head handed to me.
What's cool is that it was whatever you had said. I wish I'd saved it because it said, "But now I know I did wrong." And
Yeah,
I did.
yeah, I know exactly what I did wrong today, and I won't do that again. I hope. I probably will. I mean,
You sound like and you sound like this guy Paul, who was one of the first guys that hosted a meeting when we'd have guys who were trading equities, and he was talking. And Paul was a great trader, and he would say he was like one of the better equity traders when I started there, equity futures traders. And he says, whatever he was talking about, I did this, and he would slap his wrist. Okay, don't do that again. And then he said the same thing you was. I probably will, but at least this time I might not, or I'll minimize it or whatever. And I don't know. That's what, when you said that, it brought me back about 15 years. Because I think it was Tuesday or Wednesday, guys who traded equity futures, Eurostoxx, DAX, FTSE, would all meet, and we'd talk about whatever. We'd sit around. It was only like a dozen, not even a dozen. It was only half a dozen. And then that moved into, there were more traders. So then there was like a dozen and a half guys. So we had a bigger room. And we'd go around the table. But anyhow, Carl, I appreciate you sharing. We'll keep everybody posted. But I have no doubts you'll come back tomorrow and chip away. And by the end of the week, you'll be green. So
yeah, that's what I kind of believe too. I know this was sort of a setback, but this is what it's supposed to be. I mean, that's what trading is all about, is taking a loss and coming back the next day and making it up, not necessarily making it all back in one shot. I've got to tell myself tomorrow that I can chip away at this and be up by the week or be up for the month.
Right.
But I can't let this to basically tear me up ego-wise, that I want to revenge trade every day, and to the point that I don't even have an account.
Yeah, no, you can't, and most people would, but you know what you did wrong, and now you know what to look for again, because you have a plan. You know what to anticipate. You know what a deer looks like, and you know how to pull the trigger, and that's what you get back to looking at, getting back to keeping it simple. But thanks again, Carl. I appreciate you coming on.
You're quite welcome, Anthony.
All right, partner.
Thanks.
All right, so that's good, and that's good to hear different people. We'll talk to Carl more as we go along. One of the things I was going to ask him, but I want to move on to this, was he was, 6 months ago ready to say, nah, that's it, where he just sideways to lower, and then he's really had that kind of light bulb moment, which has been cool. In fact, I'll bring you back in a few weeks to talk more about that, Carl. I just don't have time for it today. But thanks. We hear that stuff all the time in these meetings that we'd have in a prop operation. That's all part of the ball game. So that's cool. Again, you guys are coming in late. This link at the bottom, don't worry about it. I'm going to send it to you guys live. Don't go to it. Don't pull it up. Don't start listening. We're just going to go on to these market structure exercises. I'm going to pull a chart back up and go over that template real quick. Let's open up our station-to-station chart that you guys see a lot in the trading room. There's a lot of brown lines on it. They're lines in the sand. But here's an exercise that I would make everybody do, and I would actually make them do it if we were live together and you worked for me and we were in one office. I'd actually make you do this, and it wouldn't be hard, and I know you'd be able to do it because you would do it, and that would be, all right, put your lines on the station-to-station chart where you think there's going to be a fight. And I would make each guy go up to the big projector and throw them up there. So these are lines that could be adjusted now that we look at the chart. And I just, in the name of simplicity, and if it overlays with something else you guys look at, great. But in the name of simplicity, just follow me on this one. If you don't see a couple things, you need to. When you look at this chart, if you don't put yourself in the frame of where can I draw a box or rectangle around? If you don't see this chop right in here or this being a consolidation rectangle you should draw around, then you need to work on that. If you didn't put, in my opinion, a line in the middle of this, you got to work on that. That's where there's a line in the sand, and that's going to be important at some point. Furthermore, if you take and drill down even a little more into this and don't see a box around here, there's something wrong. You didn't see a box around here, there's something wrong. And if you didn't draw a line, now there's not a line drawn in here because I didn't update it, but if there wasn't a line drawn here, there's something wrong. You got to work on that. And that's why we chopped here when I was coming on, and they flew through. Once they got through the red line, it wasn't for sure going to go lower. It was just a probability that it was going to catch some fire. And that's, the very simple exercise you got to throw. I don't care what you feel about this chart. Everyone should have this chart. And everyone should be able to put these lines in. And then clean it up. Don't let it look too busy. If it looks too busy, just get rid of lines and throw them back in there. Because it's going to get busy quick. You want to get rid of these lines and just take another look at it. But this is how I would make sure. I don't care if you didn't know anything about trading or you've been trading profitably for 30 years. This is going to help you identify the fights and the pushes, where to exit, where to enter, or get out of good positions. Now, guys that have joined the Edge are some guys have been really successful, and they're looking for ways to not to have to sit and watch maybe their trades all day. Where can I scale? Where can I find better locations to say, the longer I have a position on, the more emotional capital one has. How do you cut into that? These will help understand the structure of the market. So then here, these two brown lines, is it coincidence we're chopping around them? No, absolutely not. These brown lines come from, well, you know what? Let's do this. These two brown lines came from, put in earlier today. This top one came from this structure right there. You better know it. That better have stuck out to you like a flag, pennant, whatever you want to call it. And then this brown line right there, okay, that's from that box. Here, let me open this up. Let me draw the box again. You see why that box would be drawn in. And that's kind of why that line is there. It's actually a little high. If you take that high, that low, and in the middle is why we stopped, probably be right there, right where it was. And this line is the middle of those highs and that low. Pretty simple. Don't be too scientific about it, because that doesn't work, right? Science doesn't work when there's all kinds of emotions involved, and that's what's involved. Science doesn't always work like it does in the world of chemistry with a high level of exactness, because there's emotion. It's like markets aren't going to do what they should do because people don't always do what they should do. Just listen to Carl's story. He knew what he was doing was wrong, but his mind was the dog walker, and he was the dog, and it was pulling him around. He would have taken profits following his plan, and he let profits turn to losers because he wanted that one trade to get back a big chunk of what he was down. When you take a step away from that, that sounds like, wow, why did you do that? But when you're in it, it's just makes complete sense to want to do that. Let me get it back. This trade, this is the one. And your mind will do whatever it can to justify what it wants. And what your mind wants in Carl's situation was to feel as good, as quick as possible, period. How do you feel great really quick? Some people drink, some people do drugs, some people hold on to trades so one trade gets back what they're down. So you got to find what vehicle you're in to identify, who's walking the dog and who's the dog. So what's the other thing? There was another good thing I wanted to say. I'm going to take him back from it. And it was the, another great analogy or metaphor. When people say, yeah, if I go out and I drink too much, I won't drive. Unless you have a plan to have someone pick you up, or a cab, or a designated driver, you're going to tell me that you're going to make the decision not to drive when you're not in the right state of mind to make any decision? So you see how that's like not knowing where you're going to get out before you get in a trade. Chances are you're making the decision when you shouldn't be making the decision. That's being in a trade. You're drunk. You're drunk with your own opinion. You're going to see things that really aren't there. Your mind's going to convince you of things that are totally irrational. So it's the same kind of parallel to people who, if I drink too, all right, great. They're making a big decision in a bad kind of environment. And that's not having an exit plan, not having just a go-to exit plan. Not only for losers, but for winners. If Carl would have executed his plan of exits for winners, he would have had trades that actually did what he wanted to do and chip away. But he let winners turn to losers, and it was against what he was doing. And it's hard. It would be hard for me to convince him right now that that's good today happened, but you will be happy today happened because it makes you better if you learn from it and you know the why you were doing it. And just picture a dog and a guy walking a dog. Typically, the guy walking the dog is in control, right? Well, sometimes you're the guy, sometimes you're the dog. Today, Carl was the dog, for sure. Now, let's get back into this exercise. You got to plop these lines in, and don't take my word for it. Just see how well they work and how often they work. This didn't come down to this line stop and jump like that for no reason. And guess what? Even when it doesn't work, it still chops around there a while before it released lower at these 1900 evens. Do you think it's chopping around this 1900 even for no reason? No, because it was the previous battle the last time we were trading down there. Excellent places to get out if you're short from above. cares if it keeps going lower? Chances are it's going to gobble up a lot of profit if you're short from above before it goes lower. Make sense? Anyhow, practice putting these lines in. If you guys were in this meeting live with me next week, I would just randomly say, hey, Jim, Joe, plot in some lines on this just chart that I pulled up out of anywhere for any market. Where would you put your lines in the sand thing? Go over it. And if they went in there and they start putting these lines where it didn't matter, I'd probably just fire them if they couldn't do it. I mean, honestly, if they put in a line in the sand somewhere that just had no basis to what I just said, I'm like, this guy isn't listening. You probably should go and learn to do something else. That would be ridiculous, right? So I would just work on that and adjusting it. That's how you review. That's your homework. And it's quick homework. It's not like you're studying. It's just, boom, you put it on there. That's the structure. You're done. Ken's level at 35, which great, was on this exact premise, and the 35s have held, and the Euro stocks have actually shown a lot of strength compared to the U.S. today. So that's one exercise. Maybe next week I ask someone to do it. Maybe not. I don't know. I don't think it's terribly hard to know how to do it. But you never know. So I don't want to assume anything. Just know where the boxes are. And it's all right if you get it slightly wrong. Here's another one. Here's a rule of thumb also. If the market already used it as support resistance, it's maybe not as important. So if it like this area is not that important because number one, it already worked in here, okay? Now forget about all this noise. Just, we don't know any of this stuff. All we know is that it already worked in there, and that was the overnight low trying to fight through that fight right there. See this box? Let me draw the box again. High, low, connect them. There's the box. The middle of it was the overnight low. Now, after it's been tested once, maybe twice, or been played through, I don't worry about this anymore because it's already either worked or been played through. So it worked, and then it's just been played. It's done this back and forth. Let me get rid of that. You know what I'm saying? It's already been, they jostled around it. So I don't really care about this anymore. I care about this and this last guy down in there, the box inside the box, because we haven't revisited this since we left it. Make sense? Since we left this area, we haven't revisited till now. And that's why it's important. Longer term stuff. Look at this little box down in here, this little pennant. You think that's important? And when you draw it through, what happened? Oh, it stopped. Do it with any chart product. Doesn't have to be the ES. These are the whole reason why, people could say, wow, this works so great. I hope nobody finds out about it. Forget about that. I hope they do find out about it because they won't know how to trade it. We want them to find out about it. Who cares? There's a fight here, and that's the reason why it works. It's not going to prevent it from working if the reason why it works is because there was a legit fight and people were stuck one way or the other, whatever. So, plus people could be told about this and it will never stick. They'll never follow through. They won't get it. There's a reason why there's been 3 meetings now, back to back to back, that we've talked about this. Hopefully, guys understand why we've done it 3 times in a row. What do we got? So, for instance, now, let me just go and tell you how this would be adjusted. This red line would have been put there because it takes that high and that low, pretty much the center of it, okay? Now that we've got the information that that's up in there, you might say that this is a small box right there, okay? But then this overall thing is like a box. So you might adjust this up. It's not bearish below because we're already below it, so you kind of delete that. and you could maybe make it a right there as the center of this congestion, with that being the high and that being the low. That's the information we have. So what is that? 6-7. That's the a line in the sand right now. Could update. And lo and behold, 05 quarters and also an alert level. 07 is a line in the sand. 05 quarters an alert level. So is 99.5. These are not how I get the alert levels. I've told you guys, if you find out how I get the alert levels, I'll tell you, you got it. Those who get it, I tell them that. They could corroborate that I'm a man of my word. When someone figures it out, I tell them. This is important. You know how to throw these lines in visually. Could know how trading these fights would work. And why are they important? Because it's essentially where the fights and the bodies are buried. Okay, so where people were stuck, and it's a muscle memory type of reaction. So even if you're still not in a position from there, you remember that, just like every price that you guys trade, especially ones that are big winners or losers, that price is unique to you. If some guy told me where they've been short from, he knows the price he got short from. It's unique to him. So what this chart helps do is show us what prices are unique to the market, okay? Which is what? The majority of traders. When it's unique to the market, it's unique to most traders. That's what's important to follow, and that's the best quote indicator you'll have. Best lines in the sand that you'll create is what's important and unique to the market. Just like in your own personal trading, the prices you get long and short from are unique to you. They could. So Bob's got a good question here. Let me repeat the question and then answer it. Would I say the upper and lower horizontal lines of a box generally shouldn't overlap a congestion box? In other words, boxes step from one level to the next. Generally, they fight, move, and move. So yeah, when you generally don't get like a decent size congestion box to have another one that's decent right in here, right next to it on the next kind of sequence, I'd call it, in the same game. Usually they move. That's what made this morning in this congestion, after they broke them, this was a good move. There was a couple decent moves, and then it got like congestion on top of congestion and made it tough. But what usually you get in a market is small congestions within bigger congestion, but then once it leaves it, it's gone to find its next fight and next price discovery. I mean, that's the whole kind of idea of price discovery. They had small fights, big fights down here, and then they left and went up here to have some more price discovery and fights. It's something that profiling gives you, but not as detailed, I think, as easy and simple to use and see it in here. And this makes it more tradable than profile. Profile gives you too much, I think, helicopter airplane views, and this does all. It brings you in and out of focus much better. From a structure standpoint, this is structure. This isn't going to make you $1 million. This is going to help you understand the framework of the house and say, oh, that's going to be a house because it's framed out. You know what I mean? Which leads me to, well, let me go over this rectangle or square down here. As soon as we broke out the top, where does it want to go? Probably to an alert level, which I have, that assumes people are short at 05 quarter. That's why my alert level is 05 quarter, is I've got an assumption there are a lot of shorts that are short from there. So when people don't get out of shorts, if indeed there's a lot of shorts from here, '05, what happens when people who have money into a short don't get out? They get anxious and they start buying it up to where they got short because they see their profits diminish and they just say, oh, let me just buy it for this profit. Let me just buy it for this profit. Damn it, let me just buy it for a break even before it turns into a loser. And then the buying is exhausted because that's what short covering is, buying, right? The buying is exhausted and then it kind of rotates back down a little bit because the buying is exhausted, and that's what could create resistance at 05 quarter. Magnet and resistance. All right, so this segues me into the next exercise that I've told people to do, but not in a meeting environment. So let me switch screens here a second. Let me change my domes to sim because there we go. And now we go to, which screen are we at? Right there. Here's one of the monitor screens that you guys will now see. Hold tight. There it is. All right. Do you guys see that? So this is the S&P right in here. Those guys that are trading, you're not going to do this as much. Those guys that are sim trading, you should do this at least 1 or 2 days. If you worked for me, you guys see this screen, by the way, nobody answered. I just want to make sure. See the screen with 4 domes on it? All right, good. So you guys that are trading and you're not sim, when you want to practice in between your trades and do something, you got to do this. You got to do this. And that is you strip out the thinking. And I don't care if you think it's going up or down. If you guys were my crew and we used to have this in the prop firm, junior traders come in, we didn't actually have exercises, nor was I really in charge of anyone. I would come in and contribute from time to time, but I didn't have like, all right, you guys are under my, but point is if you guys were, and I've hired you guys, you're going to work for me, you're going to trade the company's money or my money, you're doing this exercise, and you're going to do it to the point where you're showing me what you did, how you did it. We're going to strip the thinking out. This is really important to do. Strip the thinking out, and all you're supposed to do is trade this market from the long side or the short side. Now, here's what's going to happen. Here's what's going to happen when you do it. You know what your mind's going to do if it hasn't already? When you get up in the morning and you look at the market, your mind's going to try to say, all right, well, which side should I trade it from? Remember, this is in sim. Your only exercise, the only thing that you could do is play it from either the long side or the short side. But your mind's going to right away going to try to screw it up and say, well, which one should I pick? And it's going to look at a chart from yesterday and look at an overnight chart and try to say, yeah, do it from the long side, better chance to go out. You got to flip a coin. So part of this exercise isn't having you think about anything other than execution. So you flip a coin, heads, bulls, tails, bears. Heads, that means all you could do is open long positions. This is a demo exercise, not telling or encouraging people to do it with real money. If you work for me, you certainly wouldn't be doing it with real money. But for an exercise, if you're already trading sim, or if you want to practice something in between your real trades, trade it heads, you're only opening long positions. Tails, you're only opening short positions. I could care less about I could care less which side it is based on the day. Doesn't matter. And now, what you'll find is when not to trade, and that's the most important skill. Usually skills are what to do, and it's hard to understand the invisible skill of knowing what not to do. And what you'll find is I can only sell it. I can only sell it. And then I bring this chart over. I can only sell it, but you know what? This exercise kept me from staying short above that line, let's say. Yeah, I might have been short in this chop. I don't know. But I wasn't short on this pop. I can guarantee you that. What you didn't do will be more important than what you do. Staying out of that is something that you should journal and say, I was only supposed to play it from the short side, and I didn't. I anticipated that if I was wrong, I was really wrong between here and there. All right? That's how you practice sim. Is this sim? Yeah. Wait, hold on. All right. So let's say I almost did it right now. I almost said I was trying to think about, should I play this from the long side or short side, like from the exercise, and actually do it. And I thought to myself, what has a better chance of working? And that's when I started looking at a chart. No, you can't do that. I don't know what has a better chance of working. The coin is gonna determine that. But I don't have a coin. So I'm going to flip a cap. All right, I got to play it from the short side, tails. What does this mean? This means, well, all you could do is sell it. So I'm not going to go through this whole exercise because it could take a while to actually get in or out. But all I could do is sell it. So I got to find a place to get short and a place to get out if I'm wrong, just like you would any other trade, right? So if you sold it closer to 05, maybe you're short already, but you can't say that. It'd be nice to be short from 4 even with a 3.2 point head start, but that's not reality. So right now, the best short you could have had was 450. You didn't do that. You didn't do anything lower than that, 4/4 really, but you didn't do anything. So there are shorts that are better than you to the tune of 2 points higher. So you let this structure kind of form and say to yourself, nothing. I can't play it. I don't know a good place to get short. If I sell it here, I could be in the hole and it runs right up to 04. Then what? And I feel like a moron because there are better shorts from where my cursor is. I know that now with a little bit of this structure. Let me let this form, and then I'll find a middle to sell against to know where I'm wrong, to know where the champagne gets popped. All of a sudden, I just took a lot of thinking out of where I think it's going to go, and now I was forced to make a decision about executing. Not where I think it's going to go, but where it's going to go. And now what you do is you paralyze your mind from yanking you around. It's always about you against your mind and knowing the difference between you making the decisions and your mind making the decisions. So paralyze your mind, take him out of the equation. He's weak. So right now what I would do if I was doing this exercise is I would wait for some structure to form at this point and say, then give me an idea. Right now, let me bring this chart back over. Right now, it's not really a box you could draw around yet. Here it is, but I'm not going to, what does that mean? That means, yeah, I could rethink about selling it with momentum through the middle of it, sure, but that hasn't happened yet. Well, it'd be almost one of those things where you could draw, look at this, small red line and say, I'm going to get short through there. And you could try it, but it's a momentum trade. And it's midday. What price is that, George? $99.75. And it just broke 4 or 5 points. So probably more support than it is to blast through. So you got to be careful. Let the structure show you where to get in. Don't let your mind find a place. So it went right down to those 99.75s and bounced a point and maybe more. Need some more structure. But get yourself familiar with this dome so you know what you do and what you don't do. It's like if you're just going to put in one lots, and you're in sim, get uncomfortable. Get used to getting uncomfortable so then you're better at it. Put in put in 5-lot increments. And your job is to get short now, right? 6 lots. Your job is to get short. So it just broke from 0475 all the way down to 99.25. Just sell the middle of it. That filled me right away. All right, you're short from 2 even. Why? It's the middle. Where are you wrong at? I'm wrong at 3 even, 4 ticks. I'll try to take a plus 2. What the hell? There we go. Now look where my cursor is. So I'm practicing. Again, this is sim. So I'll get filled on a plus 2 if what happens. Now look at the bonds. And this is just, I sold up against, this isn't even good structure. I'm just trying to make an example. I sold up against halfway back of this, maybe what's creating structure. The bonds are 25, 26. I need them to go 26 bid, 27 bid, go way up. This would be nice if they went up. And in the meantime, I like oil to come down because that'll influence us down. I like to pay for the trade, which I just did with a third. But get uncomfortable. Don't even trade sixes. Trade 21, something in increments of thirds. Get used to the number. Take a plus 4 and then pull that one. You're working 4. Maybe you want to take a plus 1. Now you only got, because this is sim that didn't come through. There. Well, you didn't get it, and you're set. Well, you got it. Now you're only short 2. Now you're like, well, you know what I'm going to do? I'm going to just trade 1 lots of this last 2 and separate it. So I'd like to take a plus 5 given today and then maybe a tick or 2 above where we came. In fact, that's what I'll do. Go down there and then maybe down there. But if I'm wrong, I still got to get out probably, I don't know, 275, 3 even, a few ticks away. Oil just did what I wanted to do is come down. This one, 26, 27 bid. That's why we went down a little bit. Take another plus 4, pull this and say, well, maybe I'm only short 1. Now I'm playing with the house's money. You could put in a buy stop, but who cares? Just practice. And this wasn't even great structure, but it just took a shot at something. I'd have preferred this trade not work because I want to show you how to get out of the losers. Do it with much bigger size than you're used to. That's another thing people in sim. They don't practice this to try to make money. Practice it to try to lose money. Make it hard to lose money. So the structure to this wasn't that great. It was just anticipating what the box might look like. Here's what I mean. Here's the high. Here's what ended up being the low. Here's the middle of what this box might look like. I can only play it from the short side, so I have to find a place to get short. I think that if it could get through here, we're gone. If I was a little more patient, I'd have more of the position on, but I am who I am, and you guys be different, but you had a good reaction, no real heat. You look at the bonds, they're up slightly from where you were. What do you want to happen? You got 2 points into it. You want these bonds to keep going up, though. Look at the bonds right here. When I say in the trading room, when I quote it, the bonds are right here, right? So you want them to go 28, 29. Right now there's 28 offer for 171, 27 bid for 100. You want it to go bid, 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 bid. Here's a line in the sand in here because it's just testing that other swing low. If I had more than one on, I'd cover. I tell you that right now. And I don't care if it keeps going lower. The other swing low is the day session low. You played a few ticks above there. That's why I would cover down there if I had more than one on, because that's a pretty big line. Let me show it to you. That's a pretty, see this red line? It's pretty big. It's pretty decent relatively on a short time frame because of that box that it created. And it's in the middle of it. No, it was actually this box. This channel right here. No, it was the whole thing. It was the middle of it. This is a short time frame, and I'm not suggesting that you trade short time frame if you're already not trading short time frame, but get on the ground and do it, and then back out and use this exercise to execute around, not predicting where it's going, but just executing where you have to, where the coin tells you it's going. Paralyze your mind. You see when I'm short, how my cursor is around the blue because I know I got to cover to get out. If I wanted to sell more, it would be obviously in here, but it's around the blue to cover this trade, which should have been covered down in there based on that swing low, but it's not. I'm busy talking, not seeing and staying focused on this bond. You see what this bond did? It was 27 bid and went down 2 ticks. So now I'm thinking, man, I made money on this trade no matter what. But for it to stay bearish, I'd like this to stop going down and go bid up. This is the Euro stocks down in here. I got the NASDAQ and the above me on the top monitor with the and so you got the Euro. I ain't gonna worry about the Euro, but watch this bond in here. Playing market structure, another thing you did or do is keep an eye on the last you don't see it on here. Hold on. Let me show you on the 4 PNF. You see how this market went from here to there. You sell it halfway back up, and then it comes back down a couple ticks shy of the last low. That's structure. That's why I said if I had more than one, get out there. So what does a guy like me do? Probably, I don't like taking losers on trades that went 2.5 points my way. I just wouldn't. But the structure is playing, so you don't know anything when you're right here, when you're looking right here. But you do know this low is there. So you play it to cover something a couple ticks ahead of that because that's structure. And the market knows that too. And it's the same thing on this move up. I don't know if you see it, but like this move up here stopped at 2 even. They're probably going to go a tick or two above it if they're weak and still rotate down to get some shorts out. I'll hang in there for that because this trade's more than paid for. But you see how this structure is starting to define itself? You could create a highly mechanicalized structure around understanding market structure, but you got to understand it and plop in those lines easy. Visualize the rectangles and the squares and where the fights are. Be a master of your dome. Follow ancillary markets. I'm going to just get out. Why? Well, I bid at 0.75 because they were trading. I thought maybe I'd get filled. I didn't. Now he gets filled out. Why'd you do that? Because these bonds stink. They just hang around 25. But you got to play it from the short side or the long side. The coin makes the decision, not you. Because if you get up and you do this exercise, I'm telling you, you're going to look at something to try to give you, because you want to play it from the right side. And then you're going to have some input. You want some input. I want some input. My mind knows more. Forget about it. The coin. Blame the coin. You'll end up blaming yourself. So the market dips back down. If I had more on, I'd feel good, but I don't, and it's the business. But it's about finding locations and being done with it. There's sell stops below 99 now. This next time down, had I not covered that prematurely, and I did, there's sell stops below here. Here, I want to try to put something on. I missed them. This is not a good time of day to trade stops because it's midday. They're close to running through. See how I missed it the first time and now they go? You see it? Now you see this flicker? You see what that flicker is like? Bonds have been no help. I got out up there because they couldn't go up. They were going down. We go down two more points. They still haven't gone up. So they're not a great tell right now, this time of the day. Hopefully that helped. Those are the two exercises you guys got to do. Plot those points to understand structure, and then when you could trade sim, do this. Trade it from one side, flip a coin, and just trade it and see if you could now find. Here's the whole key. Find good trades you stay out of that you otherwise thought were good trades. But number two, you're identifying opportunity. So when people tell you, you got to be patient. You'll be patient for what? You got to know what you got to be patient for. You're not going to be patient. At that point, and I made this remark in the room, when you tell yourself you have to be patient, it's too late. So you have to, by default, be patient by knowing what you're looking for. So this market ran some stops. It'll come out maybe halfway, and they'll try to keep rumbling it lower. Some more structure you could use as a potential trade. And that is, this isn't great structure though, but it's decent. If you take that high, that low, and it's a head fake, so you got to be careful, but the middle of it could place, you could put a sell in, but you got to risk only a few ticks. Why? Because this looks like, to me, a head fake to go higher. So if you get short, you put a short leash on it, because you certainly don't want to be still short if it's 05 trade. So the bears need to keep it below there. Any questions? The meeting went a little over than I anticipated. Let me give you guys that link. I'm going to stop the recording for you guys that are watching on recording. Make sure you watch that link on that first slide of today's meeting before next week's meeting.